Hi there, welcome to Kneppy Invest, and welcome to the first trading day of the week, month, and the season, which is autumn. Some exciting things happening right now in Brisbane, which I'll show you in a second. A pretty good day on the market, not a surprise because of Wall Street, but also believe there was some good numbers coming out of China, PMI numbers, and that's probably led to the market being or rallying since about 11:30, 12 o'clock. I'll talk about that. Otherwise, fairly boring on the ASX today in terms of announcements. And it's understandable because February is going to be really busy because companies are releasing their half-year, full-year results. If they're releasing half-year results, more than likely they've already released a trading update or outlook within those results. So we don't see many trading updates this time of year. However, there was one released today by a fairly small company, and that company is in my top 5 stocks of the day. There you go. But not many interesting announcements being released today. I have recorded the stock of the day, which is on Stealth Group. They did not release an announcement, but I did promise I would do a standalone video on that company. But yeah, I have come up with the top 5 stocks of the day. A nice group of companies, but slim pickings today. Choosing the top 5, unlike the last month or so, which has been an almost impossible task. A few companies have been put in suspension because they did not release their half-year results. I think about 5, maybe 6 or 7. A few results that were interesting after market had closed on Friday. I have a feeling Supply Network did. I just wrote down the T code. I have a feeling Supply Network did release their results really late. Share price is up. So the results were good. Yeah, 3:47 p.m. So just before the market had closed, just before. And a few companies have gone ex-dividend. I just put some talking points here because I thought there was a possibility there'll be nothing to talk about today. But I do have a few things to talk about. Anyway, so why is it really exciting in Brisbane right now? I think some people might be, I wouldn't say terrified, but I wouldn't be surprised if we start to see some panic buying at supermarkets, because we are now in Brisbane, actually from the Sunshine Coast, from Fraser Island, K'gari, what do they call it these days, all the way down to Grafton. That whole area is currently under a TC watch. Tropical Cyclone Alfred is moving to the southeast, Category 1. It's going to do a sharp turn the next few days and start moving back to the west or moving towards the coast. And there's fairly good guidance from the models we do look at that the most likely area would be between the Gold Coast and Sunshine Coast. Now, it could change significantly because that sharp turn you're going to see in the movement of Alfred might happen a little bit later than expected, or a little bit earlier than expected. There's also a chance it may not happen, which is, you might find that really interesting to hear. But there is a reason why we're going to see a sharp turn in the tropical cyclone. I won't get into details around that because I don't want to bore you to death, but I should maybe do a standalone video on that. Not release on this channel, release on something else. But it's really interesting to just see the sharp kink. And then if it does make that sharp kink, and more than likely it will, it's going to head straight to the coast. But just when landfall is going to occur is up in the air. We just don't know at this point. This part of the world does get hit by tropical cyclones, not all that often. So this will be the first time in quite a few years. I think someone said 50 years. That's hard to believe. Yeah, 50 years. And more than likely, it'll be Cat 1 or Cat 2, which is not that strong, to be honest with you. Depending on how slow it moves, we could see a lot of rain. If it moves really quickly, which is unlikely at this point, less rain. But if it moves really slowly, which is a possibility, then we could see significant rain along the coast, particularly just south of where it makes landfall. If it makes landfall, say, on Brisbane, Sunshine Coast will be spared most of the rain. If it makes landfall in New South Wales, Brisbane will be spared most of the rainfall. Most of the rain in tropical cyclone happens just to the south, and to the north, not that bad, to be honest with you, maybe a little bit of wind. And the whole reason behind that is just the winds around a low pressure system, which is a tropical cyclone. It's a low pressure system. Anyway, I don't want to bore you anymore with weather. So let's have a look at the market today. And yeah, if we have a look at what's happened during the day, yeah, the XJO and XAO were actually gradually just very slowly moving down during the first 2 hours of trading. I actually did notice that. I don't usually pay that much attention, but I noticed the XJO was moving towards being only up 0.2%. Financials were down, so banks were having a pretty bad day. And I was thinking, Yep, of course, banks are dragging us down. And then there was a sharp turn, just like Alfie is going to make. The sharp turn at about 11:30, 12. And I'm just wondering, without any confirmation, wondering whether it was the Chinese manufacturing PMI numbers that came out. 3-month high, but also, probably more importantly, much higher than expected, 50.8. A forecast of only 50.3. So that's much better than expected. What we're looking for when it comes to PMI is 50. 50 is expansion, below 50 is contraction. And they also mention in this little article in Trading Economics, confidence rose for the second month, moving closer to its long run average. Output and new orders growing the most in 3 months. And Bitcoin also rallied, which is interesting. And Australia corporate profits rise the most in 2 years. But I think it was mostly these Chinese manufacturing PMI numbers that did come out. I could try to confirm that. But I'm not sure if Capital Brief's going to have anything on that. Not sure if any site's going to have that, but that's what I'm assuming right now. I'll probably get some emails later in the day explaining why the market did rally in that last 4 hours of trading. Okay. Now let's have a look at the best performing sectors and indices. In fact, all sectors are up, led by energy, IT, materials, telecommunications, real estate, and discretionary, all up by over 1%. And the laggards today, staples and financials. So I'd say staples are defensive, and financials, some investors view financials as defensive, but they're not. But financials, particularly the banks, are still well overvalued, and I think they will struggle to move higher from here. Doesn't mean they won't, but I do think they will struggle just because of their overvaluation and the weak results most of the banks did release, apart from CBA. And the banks, banks up slightly. Small amount today, only up 0.16%. So those investors who are heavily invested in the banks had a pretty ordinary day compared to what everyone else experienced. I had a quick look at my portfolio just before I started recording, and my portfolio was up 1.5% today. So have to be happy with that. Okay, so let's turn our attention to, by the way, actually, let's have a look at the ASX 20, up 0.89%. And I would say 4 companies down, 16 up, and I'm thinking 2 or 3 banks are down. Let's see how wrong I am. Oh, there you go. You don't see that all the time. All 20 companies up. I would say the worst performing company, the Westpac, ANZ, National Australia Bank, Commonwealth, up the weakest between 0% and 0.22%. And then a defensive company, Staples, Woolworths, is the next worst performing. And the best performing companies, Rio, Woodside, QBE, REA, and Goodman. Pro Medicus is not or no longer in the top 20. Now let's have a look at top gainers and top losers. I don't think I'm going to spend much time looking at top gainers and top losers today because nothing much happened. Nothing much happened. You can see that just on the turnover, really low turnover for these top gainers. I'm just trying to think. Pacific Edge had another really good day. Mithril, silver, and gold. Should I focus on one of these? Well, Digital X is up because of Bitcoin, and VanEck Bitcoin ETF is up because of Bitcoin and crypto. I should not leave out the rest of crypto. And there's Digital Bitcoin ETF up, and Crypto Innovators is up, and Orbita shares Bitcoin. So a lot of Bitcoin flavored companies in this, not companies, ETFs in this. Most of the time you don't see ETFs in the top gainers, but again, there's a reason behind that. By the way, if you want to have a look at Bitcoin, let's do that. Bitcoin, pretty big rally over the last 24 hours, up 9.6% on Sunday. And I suppose Ethereum would have been up even more, 13.6%. Maybe it's just if you look at Ethereum, it could be just a dead cat bounce. Although some good volume, usually dead cat bounces, there's not high volume, it's fairly low volume. And that's actually dead giveaway that it's a dead cat bounce. You don't see the volume coming in. And volume is sort of enthusiasm. If you see low volume, the market's not enthusiastic as the share price rallies. So you really want to see really good volume when the share price rallies. That's a good sign the market is enthused. And we did see that with Bitcoin and Ethereum, some good volume coming in on that rally. Okay, let's go back to the top gainers. Anything I want to talk about here? Is there anything? Maybe 1 or 2 companies here that I might have missed, but they're nothing. So let's have a look at the list of companies by market cap. Maybe something here. Boss Energy, no. John's. Most of these have Clinivel. No, I was thinking of Clarity. I knew Clarity was down big, but Clinivel, I think that's so cheap. Email payments go, email. Up a nice bounce. Nothing here I want to talk about because, again, not many announcements were released today of significance. You can see that. None of these companies released anything significant today. May have missed one or two, but nothing that really caught my eye. Now let's have a look at the top losers. Anyway, so Pure Foods Tasmania. Again, low turnover. Belarus. That's a really weird name. Belarus. I'm going to check this one out because that name just rings a bell, and I'm wondering if they did release something today. Drilling update at the TMT project in Argentina. I'm going to share price down 30%. That actually does sound significant. Drilling update and share price drops 30%. So let's just have a look at the chart for BRX, Belarus. And the chart looks trash. This chart is trash. Anything else here? No. There's Clarity down 12.6%. Why? I don't know. 11.52%. I think sentiment. Is this just sentiment? Sentiment has definitely changed. In saying that, there has been a rally today. I think this could be capitulation. Really big volume coming through. I don't know if anything was released that wasn't in the news that I saw. Clarity. I'm just going to Google because this sounds like there's something happened. ASX news. So Capital Brief just mentioned it's down 10% on further losses. It's saying the reason it's down is because they extended their losses in the first half, but they released that last week. Did they release that? You know what it is? They released that at 3:52 p.m. So this is what happened. And because they released it at 3:52 p.m., so Capital Brief is actually right, they wouldn't have traded. I think they didn't trade after 3:52 p.m. So this is on the back of losses. But to be honest with you, what was anyone expecting? This company has no revenue. It's not about the half-year report. So I'm going against Capital Brief here. This is not the report. This is not because they made a loss. If it is, the market is stupid right now. People who sold because of the half-year report for Clarity, I'm not even going to have a look at this report from Clarity. I wouldn't say it's nonsense, but there's no information in it that is pertinent to anyone who is invested in this company. Anyway, and we did see a bit of a rally today, so I think this could be capitulation. Let's have a look at the 1 minute chart for Clarity. Actually, 5 minute chart. Yeah, look at that. That's a sign of capitulation. And the biggest volume came in at the bottom of this. Really big volume right at the bottom. In fact, the highest volume came when it started to turn. That's a good sign. So I'm calling this capitulation. Look at that volume, massive volume. Capitulation for Clarity. Now, what's going to be important over the next few days is we don't want to see the share price drop below the low of today. Yeah, that's about $2.71. Okay. So that's interesting. I did notice it was down, but I wouldn't say confused, but there you go. And that's it. Viva Leisure down. People aren't going to the gyms anymore. I don't know. So I assume people are going to gyms, just buying. Oh, NRW Holdings. They did release results after the market had closed. I remember that because I was thinking it's unusual for this type of company, a big company, to release their results after the market had closed. They released it, at 5:01 p.m. So this is probably the big surprising one, and obviously it must have been negative. Share price down 9.3%. I did not have a look at it. In fact, I forgot about it until I just saw it right then. And so this should have been, to be honest with you, the stock of the day. NRW Holding should be the stock of the day. And in fact, I'm going to change it in this video. I'll do that same video on Stealth Group because I already recorded it, but NWR Holdings is the stock of the day. Other than that, I'm going through this. It's just share price of companies just decreasing because of noise. I'd call most of these decreases just because of noise. That's about it. Okay, so let's turn our attention to the top 5 stocks of the day. Slim Pickens, which sounds like a country band, or it's probably because Slim Dusty. Slim Pickens, country band or country and what's the other one? Country and Western singer. And the first company is a company I've never had a look at before. Truscreen. Something to do with mobile phones? No. They're in healthcare. Healthcare equipment and services. Only down 3.45%, but share price was wild today, up as high as 3.3, so it would have been up probably 20%, and as low as 2.6 cents. Key markets update and revenue guidance. I was like, ooh. Now, the reason they release some sort of update is because they're in New Zealand, they're reporting periods out of whack with Australian companies. So they report in November and May, and this is the time of year they might do an update. That's exactly what they've done. The first thing I wanted to do is find out what this company does. And they did have an about section here. Here it is, an about section. A medical device company that has developed and manufactures AI-enabled device for detecting abnormalities in the cervical tissue in real time via measurements of the low level of optical and electrical stimuli. Okay, so that's what they do. And then the next thing I wanted to see is some sort of update. So here we go, revenue guidance for the financial year. I just wanted to see how much revenue this company is producing. I did go back and have a look at the most recent Appendix 4C, and they don't release Appendix 4Cs. The last financial report they did release was in November. Here it is, half-year report and accounts. I suppose we could look at that. Just sort of give us a baseline for how this company is performing. And if we go to the profit and loss statement, revenue of $1 million or $1.2 million and loss-making. So this company has minimal revenue at this point in time. Probably one of the reasons why I haven't taken a closer look at Truscreen. So let's have a look at their revenue guidance. Now, I'm assuming they're expanding just based off some words and countries here. They're expanding overseas: Vietnam, Mexico, Uzbekistan, Indonesia. So this could be a global company, but fairly low revenue right now. The planned screen programs for Zimbabwe and Vietnam have slipped. It's not a good start. Delayed production registration for Indonesia and Uzbekistan, delayed commercial activities in those markets. Delayed, not a good start at all. The timing of these revenues from the delayed commercial activities will be reported in the first and second quarter of financial year 2026, and they expect revenue to be circa 1.7 million. In 2024, it was 2.1 million. The increasing SUS sales in the sales mix and rigorous cost management should see the company reporting a small, lower, improved loss of $2 million. So revenue not really expanding all that quickly, some delays, but at least the losses aren't expanding as well. I can definitely understand why the share price was all over the place today. I do or would say this is more negative than positive. So I'm surprised the share price did get up to 3.3 cents or a 20% gain. And let's have a look at the chart. So I probably wouldn't have included Truscreen in this video if the chart looked pretty bad. But the chart did surprise me. I'll be honest with you. The chart surprised me for Truscreen. It's up. It's actually not that bad. Now, probably a little bit of liquidity issues. We did see a bit of an explosion in volume back in November, and that's when we did see the moving average crossover, share price start to rally. So share price has moved from 1.8, 1.9 cents up to as high as 3.3 cents now at 2.7. So not a bad looking chart for Truscreen. And if we go back further in time, before that, share price was in a pretty bad downtrend after IPOing back in early 2021. So is this a turnaround for Truscreen? Maybe, but their financial state doesn't give me confidence at this point in time. I'm much less of a risk taker than I used to be. So this is more of a case. I want to see proof that this company can be profitable or even just cash flow positive. And at this point, I'm just not getting that sense that I'm going to see that in the near term. So that's Truscreen, a company, I've never looked at before. Coming in number 2, we have Acusensus. The results I thought were a touch weak, but they were awarded New South Wales mobile and seatbelt contracts. I'm pretty sure they've been awarded Queensland, now New South Wales, maybe even more. If we have a look at their results, I suppose I can do that right now. Have a look at their results. Yeah, revenue increased 16% to 28.8 million. Gross profit up a little bit. EBITDA 3.4 million. Positive cash flow, pretty nice, 6.3 million. Operating cash flow last year was 0.5 million, and strong balance sheet. Cash and term deposits of 30.3 million. My thought was a little bit weaker than I thought. I did expect maybe a little bit better numbers, and they weren't profitable. That's the other thing. They weren't profitable. Share price did pull back a little bit on the results, but I didn't think it was that bad. Just wasn't as good as I thought it might have been for this company. So this company has been winning contracts, and the chart looks pretty good. Chart looks pretty good, and my opinion, this company has changed about 3 or 4 times in the past year. I was trading this time last year, got out, and definitely the sentiment in this company has changed from a little bit negative, and then in August it shifted to positive. And the share price, you can see it pull back a little bit when they release the results, but nothing too much. But the chart looks okay, and if the share price can get above $1.28, blue sky ahead for Acusensus. By the way, I probably should open up the announcement. I did not even look at this announcement. I just went, okay, cool, and just moved on. I just want to see if they have any numbers. I don't think they would have much numbers. But they might have some numbers. They do have a value of $8.9 million per annum. These project orders commenced on 1st of March 2025. Term of 2 years. Option to renew for a 2-year period. 5-year initial term with 2 options to renew. So there is a number to it. So the market has liked it up a little bit today. What was it? 3.42%. So again, today was fairly boring, so I'll take that. But again, some of that could be just market noise. Acusensus, yeah, not a bad chart. Coming in number 3, we have Synlait milk. Okay, I'm a little biased here. Synlait milk is a current trade, share price up 5.2%. They have a new CEO. One of the first announcements of the day, if not the first announcement. Have a new CEO. I went through this. Richard Wyeth, W-Y-E-T-H. I'm assuming it's Wyeth. I don't know. He seems like a really good hire. Just based on his background, where is it? Well known in the dairy community. Previously CEO of Westland Milk Products and Typo-based dairy company Maraca. Helped establish Open Country Dairy and held management positions with Coca-Cola Amatil and DB Brewery. So he's really into his liquids. Really like his drinks and his liquids. Anyway, so he does look like a pretty good hire. The vibe I got, not a bad hire, even though I don't know this person at all, just his background. And it seems like the market liked it as well. Share price up 5%. And let's have a look at the chart. Probably one reason I'm going to show you this. And by the way, Richard did mention something really interesting here. I think it was Richard. Yeah, here it is. Synlait's fundamentals are strong. No, I don't know about that. It's the fact it's now on track to return to profitability after overcoming a list of challenges. Reflects exceptional capability within the team. I'm looking forward to getting to know Synlait's farmers and staff to build on and support the turnaround story, which is already underway. So there's a chance he's getting in at the really good time, the time to get in. I'm not sure about the fundamentals are strong, but I do agree that there is a turnaround happening with this company. You can definitely see that just by the chart. Long-term downtrend, forever, seemed like. Share price went sideways for a long period of time, and then the company released something really good. I forget what it was, 24th of January. Must have been an update. Pretty good update. Share price on that day rallied 22%, and I just had to buy in on that day. Sometimes I will do that, and the share price has increased has almost doubled since then. A bit of a pullback, but that's okay. You're always going to see a pullback at some point when the share price rallies like this. We've seen 2 little pullbacks. The first one was quite small, and then look at that rally after that. So the rally in between the 2 pullbacks was quite substantial. So this is very normal trading when it comes to a company that has seen a shift in sentiment and the trend in the share price. The question I have is how much further can this turnaround play go? It could go a long way from here. It could turn into or what I remember is Temple & Webster. Temple & Webster were like 10 cents at one point, and now it's like $15. I'm not saying that's going to happen to Synlait, but it could. It could. And that's the dream, to find that turnaround story. I don't listen to Warren Buffett, who says turnarounds seldom turn. I don't think he's talking about these sort of turnarounds. I'm thinking he's talking about the mature companies who fade out of existence or fade into our memory, slowly fade. Okay, Medicus, had to include Medicus. Share price up only 3.21%. Signs $40 million 7-year contract with Lucid Health. It's just another contract. They have won. They just keep releasing these contract wins. The last one was 1 month ago, $53 million 7-year contract with Daycare or Baycare. Now, maybe the only gripe we might have is there was a 1 month gap between those two contracts after. Oh, there was a 1 month gap between the previous two contracts as well. All this company has to do is keep releasing these sort of contracts, and I do believe the share price could continue to rise from here. The only question, of course, we have with Medicus is valuation. Only question, and we need to see profits significantly increase over the next few years. A nice little pullback. This could be a buy the dip, possibly. This could be a buy the dip situation for Medicus, or on the flip side, this could be the end of the uptrend. We need confirmation of either one, and that confirmation will happen, I think, within the next few weeks. By the way, if it falls below, say, 230, I think that will be really negative. If it gets back to like 300 and goes beyond 300, that would be fairly positive. Okay, let's move on to the stock of the day. Yeah, NWH. I was going to have Stealth Group as a stock of the day, but now it's NRW Holdings. Share price down 9.3% on the back of their results. I have not had a look at these results. I was just sick of going or looking at all these results on Friday. I just had to get away from it, and I thought I'd come back to it, and I completely forgot. Okay, so if you look at these numbers, you might think it's okay. Revenue up 15.8%, EBITDA up 20.1%, EBITDA EBITDA without the D, up 5.3%, NPAT N, what the hell is N? Net profit after tax and N. And what's N? They've got here is NPAT N is operating EBIT less interest and tax. Interest is a real thing. It's a real expense. I don't like that at all. Normalized earnings per share, 12.8 cents. There's no mention of whether either of those increased or decreased, which is or could be a concern. Fully franked dividend up 7.7%. Pipeline remains robust. Did they have any sort of outlook guidance? Here we go. Guidance is updated and reconfirmed for financial year 25. Revenue is an upgrade. Earnings, EBITDA is unchanged. Okay, so just by looking at their numbers and their guidance, I would have guessed the share price might be up today. I would have guessed the share price would be up. So obviously something happened, something else is happening with NWR. So maybe the market expected the numbers to be better. Or maybe the market expected there to be a better upgrade. Maybe, I don't know. By the way, I'm just going to have a look to see if this has been mentioned in Capital Brief. Oh, okay. So NRW Holdings shares slump over Whyalla debt risk. I don't know a lot about this Whyalla debt risk. It's just they've been helped by the government or something. I forget, South Australian government. I haven't been following this story at all. One Steel administration. Okay, so I did. Oh, there it is. NRW Holdings Whyalla CIMMEC update. So what they mention here. Oh, while revenue was up 16%, the company outlined trade receivables 113.3 million from One Steel, so Whyalla-based One Steel. So that company is in administration, which was placed in administration last month. Okay, so that's why it's down. City Analysis said the company delivered solid results considering the myriad of issues it had to navigate during and post the first half. Miss at EBITDA, without the I, is largely driven by higher than expected D&A. Looking ahead, the company remains upbeat. Yeah, okay. So it seems like it's just some risk around this one still. That's why the share price is down. Other than that, yeah, the result looks okay and a little bit of an upgrade when it comes to revenue. So let's have a look at the chart. Oh, look at that. Jeez. So the share price dropped a lot. I'm trying to remember why the share price dropped heaps because the chart looks really good. Share price dropped a lot on the 13th of January. I'm trying to remember that. I do remember 13th of January. I do remember the sudden shift in sentiment when it comes to this company. Oh, Chief Financial Officer resignation. Yes. It's really interesting. So that typically wouldn't change my opinion on a company. In this case, he must or she must have resigned, maybe because of what's been happening. But this chart looks horrendous now. So no interest in NRW Holdings. So interesting story unfolding right here. Maybe I should read a little bit more about this Whyalla One still. It could really hurt that city, I believe, or that town. And I believe that's why South Australian government is getting involved. All right, that's really all I've got. Maybe apart from a few of your comments, because I can do that. Scott says, by the way, I'm just going to update this. I could just hit. Ooh, I've got to submit my US tax form. There you go. Where is it? Content. Oh, it's the wrong one. I've got to go to community. Josh James Dean, Infratil could be in trouble. It owns second largest telco in New Zealand following SPK's terrible result. They mentioned this. I'm pretty sure Infratil mentioned this. Oh no, it was another company called Manawa Energy. I just remembered one of their what do you call it? One of their investments, one of their whatever you call this. Yeah, they own 51% of this particular company. So one of their investments, they had a downgrade. And I thought the share price would decrease for Infratil. So what Just James Dean is saying here is that the second largest telco in New Zealand, maybe they're under pressure as well because of Spark New Zealand. By the way, Spark New Zealand share price dropped a lot because of really weak results. And this was one chart I was following, or company I was following closely, because share price has dropped a lot over the past few years. And this is definitely, I'm going to be keen on this when it turns around. And I don't know when that's going to be. And the reason I'm keen is because this company has the telltale signs of a really highly cyclical company just by looking at the chart. You can see that when this company goes or gets in a trend, that trend can continue for a while. So the uptrend in Spark New Zealand from 2011 through to 2024, so 13-year period, share price went from $1.40 to $5. So not a massive return, but that's a good time to be owning this company. But it does seem like, just based off this chart, it goes in spurts, goes up and down in spurts. And right now, it might be getting towards the bottom. But the bottom could be another 50% lower from here. We just don't know at this point. Anyway, so Infratil, I have been not closely following this. So this is definitely, just by looking at the weekly chart, definitely, just based off the chart, has the characteristics of a high quality company, just based off the chart, without even looking anything else. But if you have a look, so this is the weekly chart. So I've got the 100-week moving average. Sometimes I will look at the 200-week moving average. In this case, the 100-week moving average is an interesting level for Infratil because we have seen it drop below that level once back during the COVID-19 financial panic. It hit that level back in June and October 2022, a bit of weakness in the market. And right now it's just below it. So this could be a buy the dip situation for Infratil just based off the chart. But see pretty good volume coming in as well over last year. But again, if you have a look at the daily chart for Infratil, there is a little bit of a support level where it is. I'll call it a support zone at about 950. And if the share price does drop below that, that could be a sign. So I think it all depends on your thoughts on this company. Is it high quality enough that this is a buy the dip situation? If you're just looking at charts, you could say maybe bouncing off this support level, but overall the chart does look a little bit weak for me. But thank you for that information, Just James Dean. Scott, II, or 11, 9RB, I think one would be different. Telix in insider selling, it's nice when they include a sentence saying it's to improve liquidity in the market. I'm sure you're being, what's that word? Sarcastic when you say that. I actually hate it when they say that. I think it's just stupid. We see it a lot. Oh, we're going to sell some shares, our shares in this company to improve liquidity. It's just a BS thing to say. So did they say that in Telix? Yeah, it's just, I don't like it when they. It doesn't mean I'm going to change my thoughts on the company, but stop using that as a reason why your directors, your co-founders or founders, your CEO is selling some shares. It's a BS reason. They don't care about the liquidity, to be honest with you, or not that much anyway. If they really cared, no, I'm not even going to go that far. Anyway, so yeah, it's just a comment, a throwaway comment that I just ignore when I said in one of those announcements. Scott also mentions EZZ might be in its final shack out today. Let's see. So let's have a look at EZZ. I'm assuming it must be down, or maybe down 5.8. What we really want to see with EZZ is we want to see some really big volume coming in and the share price start to rally. I'm not sure we can say that just yet. Share price is still in a downtrend. I did have a close look at EZZ results and a few other companies, and the market is seeing something a little bit differently than I am. I think this company is starting to look really interesting at these levels in terms of valuation, but what is the market seeing that I'm not? Now, market can be completely wrong, and this could be just selling because share price is in a downtrend, and the market does tend to overreact in those sort of situations to the downside. That's when you can see and find value. So I'm getting almost to that point with EZZ. I think the market, the further it sells off here, the more interesting this company has because they have a lot of cash on hand. So the market cap of EZZ right now would be, I would say, 75 to 80 million. 84.44 million. They have $20 million of cash, which means the enterprise value of this company is 64 million. The profit, I think the profit's going to be $5 to $6 million for the year. So they're trading on, might be even more than that. We're just going to have a quick look at the half-year results. For some reason, I'm thinking their profit for the half year was 3.5. Where's the numbers? Where is it? It's really interesting. They don't have the financial numbers. It's a little bit down. Oh, the EBITDA was 4.8. I want profit. I don't care about that. Do I have to go all the way? Do I have to have a look at the half-year reporting accounts? I probably completely skipped it. But anyway, their profit was 3.19, so 3.2 million. So we just assume they double that, which is a stupid assumption to make to analyze profit. Let's just assume they can double their profit for the full year. And we'll say it's $6 million, which means they're trading on 10 times enterprise value, which is not that high for a company that could see significant growth in their revenue and profit in the next few years. My one gripe about EZZ is their over-reliance on China. I think 80 to 85% of the revenue comes from China. So I do like to see a little bit more diversification, but I think they're trying to expand into USA. So anyway, itchy nose. And Ibrahim Sabul says, expect to bounce on Monday. Considering US markets were up considerably. Yes, we did see that. Rick Fillion says, the Australian dollar was once greater than parity. Yes, the Australian dollar was greater than the American dollar at one point. This was maybe 2011, 2012. I am guessing, completely guessing. Or maybe it was 2001, 2002. Whenever it was, I could not take advantage of it. Let's have a look. For some reason, I'm thinking 2011, 2012, or 2001, 2002. There it is. 2011. No, I was right on. Right on. Right on. Anyway, so I was more into investing in the stock market at that point. Going back to the 80s and 70s, geez, great time to be alive in Australia back then. It was as high as $1.50. Ooh, cheap. And as low, 2001. So I was living in America then, 50 cents. I ooh, I went from Australia. I came back to Australia in uh, middle of 2000. Yeah, 2000. Oh, no wonder I could travel back then. I was wondering. I was a student and I found it really cheap to come to Australia then, and that's why the Australian dollar was like 55 cents at that point. And I was going to come back in 2001 as well, but yeah, I didn't. Anywho, so thank you for that trip down memory lane, Rick Thellion. VKA says, when you mention you are trading a stock, you mean there is stop loss set for that stock and for your long-term hold. You don't. Yes, well, when I say stop loss, I don't mean it's an automatic stop loss in the system. It means I do have a stop loss for all companies I'm trading, and every single day I look at the chart for a company just to see where the share price is in relation to the stop loss. And if the share price falls below the stop loss or gets close, I pay closer attention. But if the share price does fall below the stop loss, doesn't necessarily mean I will sell on that day, but there is a chance I will sell. So there's I don't have it in my superhero or ComSec or self-wealth. I don't set stop losses in the program or in the platform. I used to do that. I don't like doing it. I want to hit the sell trigger myself. And I don't put stop losses for my long-term holds. No, no, no. No, no. In fact, if the share price pulls back a significant amount, I'm more likely to buy than sell. Okay, so can you please advise what is the difference between a trading stock and long-term hold in terms of stop loss trading parameters? Okay, so I've sort of gone through that. So yeah, I set stop losses for my trading positions. It's all about preserving capital because I have a thesis for why I bought. And if the share price drops below my stop loss, well, my thesis is gone falling apart. I also have a thesis for my long-term holds, but has nothing to do with the chart. Has to do with the business itself. So completely different trading style. So my long-term holds the traditional sort of investing. Although, yeah, it depends on what you call it traditional. Some would say value investing is traditional, and a lot of my positions, I didn't. Well, no, that's not true. So a lot of my American positions, I did wait for a significant pullback when I did think they were good value, relatively speaking. So in a way, a lot of the stocks I do own, I did buy when I thought they were good value. So in a way, they aren't value investors, but they wouldn't be considered value companies. But all my long-term holds, I want to be high quality. High quality. That's the main thing. So it's how you define high quality, and I don't trade those at all. I will trade. I will have that long-term position, but I will trade them if I do get a trading signal. So that's all I need. Yeah. So it's how you define high quality, and I will trade low quality companies. I trade them all the time. Hopefully, I've answered all your questions. BBYR6GG talks about the DAX is up because of the software company SAP, which, yeah, I did have a look at that. Makes up 15% of the German index. I did wonder why the German index was doing really well. This was maybe a month, 2 months ago, and I discovered SAP. That's when I discovered SAP. Yeah, SAP is up 50% in 1 year. Very correlated to the DAX. Yeah, I did notice that. So that's the reason why. Absolutely. So just look at the equal weighted index to get a real idea of how the index is performing. I wouldn't even know how to look at the DAX equal weighted. In fact, DAX equal weighted. But what is it? What's it? Stocks X. Is it stock X? It says here it's stock X. Let's see if that works. I don't know. I'll find out later. No point searching for it now. But yeah, I agree that's right. But it all depends on, like, if you're doing ETF and you just want to buy into the German market, would you do equal weighted or not equal weighted? Anyway, so good insight from BBYR6GG. Rick Felling also says, would the non-signing of critical minerals with Ukraine with breakdown in talks affect American market on their Monday? Looks like no. Looks like no. Just James Dean also said, are you able to cash some of your leave and put that money into trading account? No, I don't want to cash any of my leave. I want to take leave. Yeah, I do like not working. I do like having leave, and I don't want to cash any of my leave. And someone is complaining. For Christ's sake, man, you just waited 27 minutes of variable time on a section that you could have said in 1 minute. All you have to say is, how do you place buy orders on auction market to ensure you'll buy it, and how do you put sell orders in the auction market to ensure you will sell it with respect to single opening price? Just a fucking waste of space. Well, I'm sorry I wasted your time. I am so sorry. Oh, that's just terrible. I'll give you a thumbs down. And by the way, you just what you said there, that second paragraph, you could have stated that in one line. Yeah, just wasted. You wasted like 20 seconds of my time, SSK for you. Shame on you. Shame on you. Wasting my time. By the way, my videos aren't just catered to you. They're catered to everyone. So you could have watched that video and thought it was a waste of time. Other people might have watched that video and found it valuable. So don't think my videos are catered to you, only to you. You've got to be a little bit more open-minded. The world doesn't cater to you. The world is not your oyster. Everything is not going or moving forward because of you. You're one part of the puzzle. You're one part of 8-9 billion people on this world. So keep that in the back of your mind as well. And to be honest with you, sometimes I'll watch a video and think, oh, yeah, this is not for me. And I don't complain. I don't complain to the person who did it. So, yeah, so that's a ridiculous comment you've just made. TLX sold shares as part of divorce settlement, hardly a company negative related event. Absolutely true. In fact, I think I've gone through these already. Although Just James Seen has mentioned new virus burning through China, long queues at funeral homes, this could be start of another outbreak. Don't know about that. I didn't see there was some weird sort of outbreak in some part of Africa, but who knows? We don't know. Okay, that's what I'm going to do. Sorry, M. Solkar. No, actually, I'll do one more. Can you please provide your thoughts on Neuron Pharmaceuticals, MAD, and corporate travel management? Okay, so I own 2 of these. I'm trading corporate travel management. I do own Neuron for the longer term, and MAD, never owned it. So let's have a look at the chart for all these companies. So just the chart. The long-term future for Neuron could be anything. So I bought Neuron way back in late 2021 at $3.20. I have taken profits along the way. They're now a profitable company. They're getting, what do you call it? Stuff from Arcadia, because they're selling Debut, which is a treatment for, maybe not a treatment, but maybe it is a treatment for Rett syndrome. So they are getting, 10% royalty, 15% royalty, something like that, from Arcadia selling that particular drug. So they are a one-product company. Not the biggest fans of one-product companies, but that could change over the next few years. They do have a lot of things in the pipeline, but at least they've got money coming in the door. Now, the share price has been in a bit of a downtrend for the past, we'll say, 6 to 9 months. And there is maybe the first signs of that sentiment, negative sentiment starting to shift more positive, maybe. But really nothing to see when it comes to chart for Neuron. Will I add to my position? That's probably the next step. If I do like the chart and if I see the share price starting to move into an uptrend, I might take a trading position Neuron. But my long-term position Neuron is going to remain where it is right now. I probably won't sell my shares in this company unless something goes drastically wrong. Corporate travel management. This is another one where this used to be, I used to love this company. If you go back about 7 or 8 years ago, yeah, this was definitely a market darling. Share price rallied all the way to $32. I really like this company. It was a shareholder through a lot of this period. It's been, this company has been up and down since then. Of course, COVID-19 was pretty bad for all travel companies. But if you have a look at the chart, the weekly chart since then, there's been no uptrend. There's no trend. So in a way, this has been more of a trading stock since 2018. So we're talking about almost 7 years. It's been a trading stock. So just by looking at a chart, you could actually argue that this is not a high quality company. And there's reasons behind that. But if you look at the daily chart, and let's have a look at the daily chart. The daily chart actually looks pretty good. I like this daily chart. We had a moving average crossover back in November. We had a bit of a pullback and the share price started to rally. They released, I think, good results. The market liked it. Share price rallied, and then we've just seen a bit of a dip. So this could be the buy the dip situation. Share price has just touched the 25-day moving average. So this could be a nice little buy at about $16. If we see the share price continue to fall, that would be a little negative move. Also, I like the volume, really good volume coming in when they release their results. And if you go back to August when they released results, even though share price was down, it was down a lot on that day, probably non-open, and that was the low. That's actually a good sign. When you see a sell-off, when they release some negative news, and that's the low, that's usually a good sign. The market knows most of the bad news has already been priced in. So I don't mind the chart for coupled travel management. The question becomes, with this company, is it high quality? And I do have doubts about that, really big doubts, whether this company could be considered high quality. Mader Group, yeah, I don't have many thoughts about this company in terms of its business. Share price has been doing nothing for about almost a year and a half. Yeah, about a year and a half. Now, before that, share price was in a beautiful uptrend. A beautiful, glorious uptrend. The company listed back in September 2019. Share price went sideways for about 2 years and then moved into a beautiful uptrend. And that uptrend lasted 2 years. That uptrend lasted 2 years. And share price went from $1 up to $8. So you can actually say and argue that this little period where share price has done nothing is a really healthy consolidation period. If we have a look at the weekly chart, okay, so we don't have the 200-week moving average all that much, but yeah, this could be a high-quality company. I don't think we have enough data to know that just yet. We have about 5 years of data. I do prefer at least 10 years to really understand whether a company is high quality or not, but we can get signs before that. The question is or does Mader Group have the characteristics or the signs of a high quality company? And I think you could suggest maybe, just based off this chart, that maybe in the long term it does. Okay, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.